Hey guys, thanks for joining me today. We're doing a no fluff video today. We're going to speed run the 1040. I want somebody who's viewing this video to be able to look at this and get a feel for, what are the generally most common things you need to be looking for on your 1040 and the information you can glean from it. We're going to dive right into this thing. So this is the 1040. If you hear somebody reference the 1040, it's your U.S. individual income tax return. It's basically your personal tax return. It's what everybody in the entire United States is supposed to fill out for their personal tax return. You got a number of choices here, but the important thing is this is going to be the main form of your tax return. All the key items, all the taxable amounts are going to show up here. Everything else in your tax return is going to get summarized here into one box or another. We're going to look specifically at what are the most common ones for most people, a sort of a common profile across a lot of taxpayers that I see, and we're going to go through the items that are most important to that type of person. If you can get to understand some of this stuff, you're going to be heads and shoulders above everybody else. Understanding this stuff to some degree is really valuable for doing your own planning, doing your own financial work. Let's dive right into this thing. All right, you can see we've scrolled down a little bit just so we can see all the items on the page, and we're going to run through these highlighted items. We're going to ignore everything that's not highlighted for now. We're going to look at these items because these are sort of the key ones that people have on their tax returns. A lot of people deal with these. It could benefit to know a little bit more about them. The yellow highlights are just going to be the individual line items, and the red items are going to be more the summary items, your total income, your adjusted gross income, your total taxable income, all the good stuff. Those are highlighted in red. Let's run through these real quick. So the total amount from Forms W-2, that first highlighted box, that's going to be the one that most people deal with. That's going to be the W-2 you receive from your job at year end. This is going to have your taxable amounts listed, how much came out for insurance, your 401k contributions, all that good stuff. The taxable amount that shows up there is what's going to show on this line here and what goes into your taxable income from your W-2. You're going to see those W-2 items right there on that top line. The second one we get down to, and really the third one we get down to, tax-exempt interest, taxable interest, qualified dividends, and ordinary dividends. We're not going to worry about the difference between those amounts right now. But what you need to know is that most often comes from the 1099 you receive from your brokerage. On that form, you're going to have a 1099 div, which is for your dividends. You're going to have 1099 INT, which is for your interest. And you're probably going to have a 1099B, which is related to your capital gains when you're buying and selling stocks. But most important, if you have a brokerage account, you're sending a statement to your CPA, this is where those amounts are most likely going to end up on one of those two lines. We move on to IRA distributions, pensions and annuities, Social Security benefits. If you have any of those retirement related items, it's likely going to show up on one of these lines here, 4, 5, and 6. There's a way that they have A and B to differentiate what's taxable and what's not taxable, but those are where these items are going to end up. Retirement items like to end up in 5 and 6. Then you have capital gains, 7 capital gains here. If you sold or buying or selling assets in a way that generates a gain or a loss, those are going to be capital gains and losses. Those are going to end up here. This can also come from that brokerage account, that 1099 you're going to receive from your brokerage. But if you're an investment in real estate, this line is where you're going to find your capital gains for any properties you're buying and selling, commercial real estate, think of any assets. If you're working with capital gains, you're going to find that summarized amount showing up on line 7. Line 8, additional income from Schedule 1, line 10. They really should point this one out a little stronger because this is a lot of important income lies here. If you have a partnership, an S-Corp, anything like that, a business, income that comes from that gets passed on to your return or your personal return is going to show up in additional income, but we don't need to summarize them all. If you have additional income sources that are going to be taxable, that have not been identified previously on this tax return, they're likely going to show up in item 8 right there. And that's where you're going to see them summarized in that box. Then we come to that first red line there. There's your total income. It's essentially going to sum up the items above it. Not too difficult in concept, right? You're going to sum up all the income sources you've identified up there. That's going to end up as a total in that box. Adjustments to income, line 10. This is more of an official tax term, really. This is a set of deductions you get that are differentiated from other items. We won't dive into that right now. But think student loan interest, think IRA contributions, stuff like that. Those are common items that go into these adjustments that essentially get deducted from total income to arrive at our next red line, the adjusted gross income. These two red lines are important because they essentially drive other calculations within your taxes. Without diving too far into that, they are important terms, your AGI, your adjusted gross income, your total income, because ultimately they're going to determine other deductions and other taxable amounts that may arise elsewhere in the tax forms. So once you get your AGI settled, we arrive at deciding between the old standard deduction and itemized deductions. Now, just to revisit quickly how that works, you get the standard deduction amount, whether you're single or married filing jointly or any other filing status, you have that set amount. And then itemized deductions, medical expenses out of pocket, mortgage interest, charitable donations, state and local taxes. You got 4 main items there that essentially you pool those together, you compare them to the standard deduction, whichever one is more, you get to take on your taxes. That's going to show up on this line. Next, you arrive at the qualified business income deduction. I'm going to do probably multiple videos on this just to outline exactly how this works. It's one of the stupider deductions out there in terms of how it's built and how it's supposed to work, but it's very valuable for business owners who can take a 20% deduction essentially against their net income there. So we want to make sure we get it, but it's also important to understand kind of the ridiculousness of how it works if you're truly planning around it and strategizing around it. And after all that good hard work, what we arrive at is your total taxable income. So we factored in all the lines here, all the deductions have been calculated. You get your taxable income amount. When we flip to the next page here, you'll see our next red line is your tax. So that taxable income amount is going to run through your marginal tax brackets, your capital gains calculations, and you're going to arrive at a total tax amount. That total tax amount gets reduced for our next item on line 19, the child tax credit. If you have the child tax credit, any amount you're claiming is going to show up here on line 19. That's going to reduce your total tax. Then line 20 here, Schedule 3, line 8, that's essentially going to summarize other deductions and credits you might be able to get. Whatever you end up being applicable for, that's going to show up on that line and also reduce that tax amount. We arrive at line 23 here. This is, you can see it says including self-employment tax. The self-employment tax is going to be the big one that shows up here. If you are structured in a way that incurs self-employment tax, you're going to find a substantial number here, and it's important for managing, understanding kind of what you're dealing with in your total tax rate. Finally, after we do all that good work, we have our total tax. Everything's been factored in. This final amount is essentially what you owe for the tax year. You're going to find that on line 24, where we then move into the payments section, line 25, A through C. You're going to see Forms W-2. This is where your withholdings are going to show up. Those are payments you've made for your taxes. Forms 1099, any amount you've withheld there are going to show up. Any other forms, just don't worry about exactly what it is, but it can arise where other forms can come into play, where essentially you paid some tax already. We want to make sure we factor that in. The last one being any estimated tax payments there. I don't have that highlighted, but if you look at 26, that's another key one for any business owners. If you're incurring substantial income throughout the year through a business, you probably, or you should be making estimated tax payments to keep that tax liability manageable. Those are going to show up here on line 26. That's the last key item we need to be worried about. Those are going to factor into your payments. When we add all that up, we come down to line 33. Those are your total payments. And we're going to compare line 24 to line 33. And that's how we're going to arrive at this last part here. We're either going to use line 34 or line 37, depending on if we have overpaid in tax or underpaid in tax, and eventually owe some there on that last red line. But that's where it's going to happen here. Line 24, line 23, those are going to get netted together, compared, and eventually the difference between the two is going to result in your refund or the amount you still owe. Now, like I said, that was just a speed run. We're going to dive into these items in detail, pretty much all of them in future videos. Let me know what's important to you to hear. The important thing here is that hopefully this can help you run through this form. If you have to look at it and take a look at some of these things, or if you're trying to do your own planning from prior years or something like that, hopefully this speed run video can help you understand what you're looking at and help you get a little more information out of it. Thanks for joining me on this one. My name is Matt Speckman. I'm a CPA. We'll have more videos next time. Again, drop me a line if you have anything you'd like to look at. Hopefully this helps you. We'll see you next time.